In a year flooded with altcoin experiments, one silent contender might outpace them all. Its name is Zebec. It already processes over $100 million in live payroll annually, yet most investors have never even heard of it. And depending on who you ask, it is either the next Solana or just another Mirage in the desert of broken promises. But here is the strange part. Zebec is not trying to be flashy. It is trying to be essential. So what makes this low-key project a serious conversation in boardrooms and VC deal rooms in 2025? Let us find out. If you value deep research like this, subscribe to Crypto Wayfarer, because this is where fundamentals meet future cycles. And this one, it is worth unpacking. Let us start with the big picture. Crypto in 2025 is no longer the casino. It was in 2021. The Bitcoin ETF has soaked in billions of institutional capital. Spot Ethereum ETFs are live in select markets, and altcoins are rotating back into focus, but the game has changed. The days of meme coins dominating portfolios are fading. Instead, investors are asking better questions. Does this token solve a real problem? Does it integrate into the macro picture of finance? Does it actually matter? That is the world Zebec is entering. Not hype, but harsh scrutiny. And that is what makes this story interesting. Zebec positions itself as a continuous settlement protocol. It enables real-time streaming of payments. Imagine salaries, subscriptions, or treasury distributions streamed every second rather than batched monthly. This matters more than it seems, because in the age of tokenized everything, money has to move faster. Zebec wants to be that movement layer, and it is not just theory. It has already executed live payrolls for over 2,000 organizations. It claims to manage over $100 million in annualized streaming flows, and it operates on multiple chains. But this is where the story takes a sharp turn. Zebec started on Solana, then it expanded to Ethereum. Now it is pushing aggressively toward multi-chain support, including Arbitrum, BNB Chain, and Base. It also recently announced compliance-friendly rails for enterprise use cases. That means they are not chasing hype. They are chasing relevance. Now let us get more technical. Zebec's core architecture is built for programmable money. Using smart contracts, users can stream funds second by second. This opens up granular control for salaries, grants, DAO treasuries, even SaaS models. And it is not just limited to stablecoins. The protocol supports both native assets and wrap tokens. But what sets Zebec apart is its hybrid approach. It offers both DeFi native tools and interfaces for traditional businesses. They have APIs and dashboards that feel familiar to CFOs, not just developers. That matters in crypto 2025, because adoption will not just come from Web3 natives. It will come from startups and enterprises plugging into this world. So who is backing Zebec? And why is smart money paying attention? Let us look at the funding. Zebec raised $15 million in its seed round in 2022. Investors included Circle Ventures, Coinbase Ventures, Solana Ventures, and Lightspeed. That is not small capital. That is high conviction, institutional money. Then came more. They secured another $8 million through ecosystem grants and partnerships. And perhaps most telling of all, they were selected to power salary streaming for USDC creators through Circle's developer initiatives. This is no accident. It means Zebec is aligning itself with stablecoin infrastructure. And as stablecoins grow, so does Zebec's potential role. Developer activity has been increasing too. Over 350 projects have integrated Zebec's streaming primitives since launch. And according to Token Terminal, Zebec ranks among the top 30 protocols by active developer count across Solana and Ethereum combined. That is significant, because developer mindshare is the early signal of lasting relevance. But what about the token? Zebec's native token is called ZBCN. It governs protocol fees, staking, and voting. Its tokenomics have gone through a recent revision in 2025 to improve transparency. Total supply is 10 billion tokens. Only 20% is circulating as of now. That leaves over 6 billion tokens still locked. But starting Q3 2025, major cliffs begin unlocking for early investors and team members. That is both an opportunity and a risk, because the unlock schedule is steep and sell pressure could intensify. Token volatility is not just likely, it is inevitable, but it also means price discovery is ongoing. Strategic buyers may see this as an entry, speculators may fear dilution, and here is the cliffhanger. One key decision in Zebec's governance could change everything. Earlier this year, the DAO proposed reallocating 30% of treasury tokens into ecosystem grants. This move, if passed, would radically accelerate adoption, but it would also increase sell pressure. The vote is ongoing, and the market is watching, so how should an investor interpret this? Let us build the bull and bear scenarios. In the bullish case, Zebec becomes the Stripe of crypto payments. Every DAO, every remote team, every DeFi protocol needs streaming finance. Zebec plugs in, transaction volume grows, fees generate staking rewards. The ZBCN token becomes a core utility asset in the Web3 stack. And with partnerships from Circle and Solana, its reach compounds. But there is a bear case too. What if streaming payroll remains niche? What if larger players like Stripe or Coinbase launch competing rails? What if regulatory scrutiny tightens on programmable finance? And most of all, what if token unlocks suppressed price action for too long? These risks are real. So how does Zebec defend its moat? Let us look at its roadmap. In Q2 of 2025, Zebec launched Layer 0 integration. This allows users to stream funds across chains with native finality. In Q3, it is launching a permissioned compliance layer designed for enterprise payroll and invoicing. This includes KYC support, audit trails, and fiat off-ramps. And by Q4, Zebec plans to roll out a programmable treasury module for DAOs. This means streaming grants, milestone-based payouts, and budget automation. This single decision could change everything for protocol-wide adoption. These are not hype features. They are real infrastructure for the next wave of crypto-native organizations. And that is important, because in 2025, the next Solana will not be about TPS. It will be about integrations. Zebec's expansion across Solana, Ethereum, Arbitrum, and Base positions it well. Its UX is also improving. New dashboards are optimized for both retail and institutional use. That could be key for onboarding outside capital. But what about governance? Is Zebec a real DAO or just a team-run operation? The answer is evolving. Currently, the Zebec Foundation oversees upgrades and funding allocations. But in early 2025, they launched a community forum and snapshot voting system. Participation is growing. Over 7,000 token holders voted in the last major proposal. Treasury funds are now partially controlled by multi-sig with rotating delegates. However, over 40% of voting power still rests with the core team and early contributors. This remains a point of concern for some decentralization purists. Still, it is a meaningful start, and it shows signs of improvement. Now let us talk adoption. Zebec currently supports over 70 projects in its streaming ecosystem. This includes grant programs, payroll engines, and DAO tooling platforms. One notable integration is with Superteam, a collective of global freelancers paid via Zebec. Another is with Juice Finance, enabling real-time rewards for LPs. Organic adoption is happening, but the big unlock will be enterprise usage. And that is the next test. Because retail users might care about speed, but institutions care about audits, compliance, and uptime. Zebec knows this, and that is why the permission layer is not a side project. It is the main path forward, but what happens next might surprise you. What if the very feature that gives Zebec legitimacy, its compliance, layer alienates its early users? Some purists in the DeFi space believe any KYC integration violates crypto's ethos. If Zebec leans too far toward institutions, it may lose grassroots support. That tension is real, and how the team handles it will shape the next chapter. So where does all this leave us? Zebec is not a meme coin, and it is not trying to be. It is infrastructure. It is foundational, but foundational does not mean guaranteed success. The path ahead depends on execution, token design, adoption curves, and regulatory clarity. But here is the final thought. If money in Web3 is to become programmable, if payrolls, grants, and treasury flows evolve beyond spreadsheets and delays, then someone needs to build the rails. Zebec is doing exactly that. Whether it becomes the next Solana or not, it is building in the right direction. And that matters more than hype. Stay sharp, stay strategic, and keep wayfaring